Welcome to this explainer. We're going to kick things off today with a pretty-surprising confession from Aswath Damodaran. Now, he's a veteran NYU Stern professor who has spent 40 years teaching corporate finance, yet he actually considers himself a dabbler. He admits he basically just writes to reason his way out of his own confusion. And that curious, humble mindset is actually the perfect launchpad for our journey today, because we are going to uncover the real secret to long-term investing. And spoiler alert, it's a secret that shifts the focus entirely away from the stock ticker and puts it directly onto you.
So, why do most people fail to beat the market? It's a massive question, and it's the exact one that led this professor to study Wall Street's absolute elite. Toward the end of the 1990s, he ran the special class made up entirely of legendary, market-winning guest speakers. And what he discovered by studying those winners? It completely rewrites how we should think about financial success.
To figure this out, we're going to quickly walk through the illusion of success, 3 big investing realizations, strategy versus philosophy, something I call the Warren Buffett trap, and finally, finding your own investing identity.
All right, let's jump right into part 1, the illusion of success.
You might look around and see people absolutely crushing it in the market over 1, 2, maybe even 5 years, and naturally, you assume they've got it all figured out. But the data shows a completely different reality. A staggering 95% of that short-term success, it is literally just luck, being in the right place at the right time. Only a microscopic 5% represents actual, repeatable, skill-based long-term success. So most people who try to beat the market just don't. But crucially, a select few actually do.
Which brings us to part 2, 3 investing realizations.
When the professors studied that tiny fraction of actual long-term winners, 3 distinct realizations popped up. Number 1, as we just saw, very few actually pull this off. But number 2 is highly encouraging. There is absolutely no single path to success. These elite investors came from totally different ends of the spectrum. Some were deep value investors, some were hyper-growth people, fast-paced traders, or even technical chartists reading tea leaves. Yet, they all reached the summit. How? Well, that's realization number 3, and it's the glue. Every single one of them had a rock-solid core philosophy. Even though they had wildly different views on how markets operate, they each had a foundational belief system that they truly owned.
Let's break down exactly what that means in part 3, strategy versus philosophy.
This is absolutely crucial to understand. A strategy is just a tactical action. It's saying, hey, I'm going to buy a stock with a low price-to-earnings ratio. Okay, great. A philosophy, on the other hand, is a deep, comprehensive view on exactly why the market might underprice those low PE companies in the first place. That is a massive distinction. Strategies come and go like fashion trends. When a strategy inevitably stops working, a true investment philosophy is a deep well you can consistently go back to so you can figure out your next move.
Now, let's look at what happens when you get this wrong in part 4, the Warren Buffett trap.
Think about the hundreds of books written about Warren Buffett. I mean, literally hundreds. People buy them by the millions, dissecting his every single move, his dividend strategies, his value assessments. But ask yourself a really sober question right now. Out of all those millions of readers, how many have actually replicated Warren Buffett's long-term returns? The answer is practically 0. Nobody. But why?
There's this fantastic old proverb that answers that exact question perfectly. There's many a slip between the cup and the lip. It basically means you can try to imitate a legendary investor all day long, but if you don't possess the exact personal traits required to pull it off, you are going to spill the cup. You're going to fail. You simply cannot borrow somebody else's conviction when the pressure is on and your portfolio is bleeding.
See, your success in the markets depends entirely on this unique combination, your psychological makeup. It's all about who you are at your absolute core. What is your true stomach for risk when the market totally tanks? How much actual capital do you bring to the game? And exactly why are you doing this in the first place? Finding the absolute best investment philosophy out there is a total myth. The only thing that matters is finding the philosophy that perfectly aligns with your specific psychological wiring.
Which leads us to our final section, finding your investing identity.
While the fundamental core rules of the financial game stay largely the same, the playing field itself is never completely static. Over the last decade or so, entirely new asset classes have just exploded onto the scene, creating completely new ways to play the game, and those require entirely new belief systems.
Let's look at alternative assets impartially for a second. We've seen the meteoric rise of the crypto trader. This is someone trading Bitcoin who possesses an insanely high risk tolerance. Now, if that aligns with their mental makeup, it's a perfectly valid philosophy. Or consider gold and physical collectibles, which are heavily favored by people looking for tangible wealth preservation. These specific alternatives might not be for you, they might not be for me, but they are completely valid for people with the right psychological profile and capital structure.
So as we wrap up this explainer, we arrive at the ultimate question you really have to answer for yourself. What is your investment philosophy? Instead of endlessly searching for the magic bullet strategy or blindly trying to copy billionaires and market gurus, you really need to look inward. You have to discover the unique approach that perfectly matches your brain, your bank account, and your personal goals. Because once you lock down that core philosophy, the right strategies will just naturally fall into place. So I'll leave you with this provocative thought. When the market turns violently against you and your favorite strategy totally fails, what is the core belief you are going to fall back on?